What's up, y'all? We back again with another low-key trade weekend. We know when some weekends hit and the markets close, it's time to review. Review the past week, trades we made, trades we missed, things we could have did better, um, and also prepare for the next week, possible setups, things we might want to look at taking depending on how the market starts to overall take place and take shape when the market opens on Sunday around 5 o'clock. So let's get into it. First off, go to my watch list real quick. We're going to start with GJ. Now, for the sake of the video, I already marked it up so we can move along. I'm just going to remove my indicators right now so you can see my screen a little bit better. Move this window. Okay, so right now the pair we're looking at is GU, Great Britain, US dollar. I ain't gonna lie, it's been real choppy lately. It had a nice little sell-off in weeks past, as we can see. Real nice sell-off. Nice little break out of this trend line. Little break and retest, dropped crazy. Another break and retest, retested the zone, dropped crazy again, and again, and again. And here we are closer to the present. For the most part, it was real choppy, a lot of consolidation. Didn't take too many trades. Um, really just ultimately wanted to see, once the consolidation break up, what I was looking at to potentially jump in the trade. I feel like now we're in a space to where the market is going to reverse, which, well, it already has reversed. And now what was once a bearish market is now a bullish market. So with the trend being bullish, we're definitely going to look for some buy opportunities. As of right now, this week, as we can see, let me remove my drawings so it doesn't confuse anybody. I have two Fibonacci's set up with my different points. If you want to know my points for my Fibonacci, just let me know in the comments and I'll get you that. Or you can just screenshot, pause this page, and kind of set it up if you know how to. But for the most part, once the market hit this area of support on top of the zone with these what I like to call exhaustion wicks. When I say exhaustion wicks, all I mean is that the market's cooling off from the direction it was going, which was bearish. These wicks just indicate that the market, instead of having a seller's bias, now the buyers are stepping in and kind of forcing their weight and saying it's time to change things up and let's make it bullish. So right now, when we look for opportunities to get in, I like candlestick reversal patterns. Bullish engulfing, evening star doji, morning star doji, mostly those for the most part. Um, as far as GU right now, like I said with the wicks, that was my first indicator that the market was cooling off as far as its bearish trend. Um, Looking for a spot to get in. I kind of set my Fibonacci up right here on this green candlestick because it's the lowest point of all these wicks. Once the market got up to retesting this zone right here, I just looked for the highest wick of this consolidation right here, and that's where I put my zero at. If you know about Fibonacci, you know I'm gonna move this from it's gonna start at 100%, and you're gonna put your 0% right at the top point before the retracement. Now it looks like the market's retracing, it has retraced. I view this as a minor structural retracement. This one right here, and then it went up, and you can see it hit the 27%, which is take profit 1. 61.8 is take profit 2. Didn't hit that yet, but it did hit our take profit 1. Now it's kind of consolidating in the zone. I feel it will make another move down, a bearish move down, probably not on this Fibonacci, not this small Fibonacci, but on this larger Fibonacci that I kind of spaced out a little bit so you can see. So let me remove this smaller one so it's a little clear. And also I'm gonna remove some of these little drawings that I have on here. I really shouldn't have put those in here to begin with, but I try to chart up before I record my video just to make it easier for myself and you guys, so the video don't wind up being longer than I intended. But like I said, that was my, I guess, my minor structure retracement on the Fibonacci that I just deleted, that hit a 27.1 that started consolidating. As you can see, the trend lines, it's a little triangle that is right. It's the market is ready to break out. Now, which direction is going to break out, we don't know yet. Again, you're going to trade what you see and not what you think. That's very important in trading, or else you're going to find yourself on the bad end of a trade and a lot of drawdown and possibly a blown account, and nobody likes a blown account. So as far as this larger Fibonacci that I had on my chart, we basically going to look for, and where's my drawing tool? I'm going to use the drawing tool. Here, a brush. I'm looking for something like this. Boom. Something to come down. Where will retrace at? I mean, you don't know until the market lets us know, but the 38, the 50, hell, even the 61.8, it could hit any of these levels. Mind you, this is just my assumption. Like, we don't know what it's going to do until the market opens up, but this is what I could possibly see happening. Boom, take profit one. Boom, potentially take profit two. This is what I feel is going to happen. Again, I could be wrong, but as far as my Fibonacci goes, I see the market going up. It hit this zone area that I drew. It's gonna reject off that, come down a little bit. Obviously, as you can see, let me give you an example. Let's say, for instance, the market could come down to this area where this wick, where this nice wick is actually. Bounce right off that, hit an area of support. Remember, I already extended down here in the past twice. It was a nice little, well, it tried to retest right here in this area. So this is a comfortable area for me as far as the zone goes, as far as where this overall major structural retracement could take place. And then we get in, we want to get in somewhere in this area right here where the zone is. Again, we don't want to get in until we have multiple forms of confirmation or confluence, however you want to put it. Again, I look for candlestick reversal patterns, bullish engulfings, even the star dojis. Well, in this case, it'd be a morning star doji. So excuse me. But yeah, I'm looking for my candlestick reversal patterns. And I'm also looking for it to, if it rests perfectly hitting that 50 on top of that zone and I get a candlestick reversal pattern, I'm getting it for a buy. But mind you, it doesn't have to rest on top of it. It can go extend down lower. It get to 61.8. It could even hit the 70. The market's going to do what the market's going to do. We can only get ready and prepare ourselves. And the most important thing is that you know what to do when you notice it's the perfect time. You don't hesitate. You have your risk management set up. You have your psychology good to go, because that's very important. You enter that trade knowing you have multiple forms of confluence and confirmation, and it's going to be what it's going to be. But that's why we do our technical analysis, so that we can try to remain as profitable as possible in our trades. You're going to take losses in the trading game. It's a part of the game. But with technical analysis, we can increase our probability of overall being on the winning side of trades. So again, for GU, like I said, I think the market is bullish. We already had a little minor structure retracement that I drew a Fibonacci on that hit a TP1. Now I feel it's going to be a major structure move with this blue line right here. I think it kind of tried to break. It hit it, rejected off of it, came back up, tried to retest it, rejected it. Now I felt like it's going to come back down. Where it's going to wind up, I do not know. You know what I'm saying? But obviously, as you see by the trend lines, it's going to break out of these trend lines. The question is in which direction it's going to break out. I just think it's going to break out to the downside. before it ultimately turns into a continuation of this bullish uptrend. But also, mind you, let me say that it could just go up and break out on the upside, right? And then my original feelings could be totally wrong, and it could break out. Let me get my brush again one more time. Where's my brush? I don't use the brush like that unless I'm recording videos. So again, we have our brush. It goes up, it goes up, it breaks out of this zone, right? It can go wherever it wants to go. Then it comes back down and retests this zone before it goes up. That's also a possibility. But remember, either way, just with knowing market structure, we ultimately can be extremely profitable because we're going to go off what we see and not what we think. We're going to make timely entries into the market based on what we see. Again, I'm a breakout trader, breakout of trend lines, breakout of zones, support and resistance. I use Fibonacci. Also, the two indicators that I do use for the most part, my RSI, my 70, overbought, my 30, oversold. I usually use my RSI to find divergence. If you don't know what divergence is, please go look it up because it's very important. I'm not going to talk about it too much in this video. But yeah, I use RSI, and every now and then I will use the ADX. So ADX got kind of used to give me an overall outlook of the market and the strength of the move and what's potentially to come, whether it's bullish or bearish. So I just use that as another form of confluence. But yeah, as for GU, that's pretty much it, guys. When the trading week starts, we're also going to see what's going to happen. But I'm pretty sure, can't be guaranteed about anything in trading, but I'm pretty sure we have started a bullish trend from right here, and it's going to continue. Also, I'm glad I thought about it. Let me see, top-down analysis. So to also help with my confirmation for top-down analysis, what I will do is, before I even mark up my charts, what I will do, so that my brush on, what I will do is I will start at the week, and I'll kind of look at what the market is giving me. I'll turn on my RSI. You know what I'm saying? As far as the week goes, what's this? 1, 2, yes, about 2-3 weeks ago, we were at the 70. You could say we were overbought on the week. Nice little red candlestick right here. This pattern right here, hopefully you can see it clearly, is an evening star doji for the week. Now, I don't trade off the week. I just use it as my form of top-down analysis, but it is a nice indicator that a sell is coming. We go to our day. When we go to our day, again, right here at its top, and this was the 24th of September, and today is October 12th. So right here on, I'm sorry, this was the red candlestick was the 25th. So as you can see, this is a candlestick reversal pattern after a bullish move up. This is a candlestick reversal pattern. This is a bearish engulfing candlestick. Bearish engulfing just means that the colors I use is red and green. Red being for bearish, green being for bullish. So the bearish candlestick is larger than its previous candlestick, which is a bullish candlestick. So you see in this move, this candlestick is larger than this candlestick. So this is a perfect candlestick reversal pattern, bearish engulfing. Normally we don't trade on the day, but if you were to trade on the day, you would sell right at this new candlestick open. and then you could have made all these moves for the next 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Probably looks like about close to 2 weeks if you're gonna hold it that long. As a swing trader, I'm not a swing trader. I'm an intraday trader. So again, this is just top-down analysis. Now we're going to go to our 4-hour. Again, as you see, for this particular move on the 4-hour, I drew this small little zone area. As you see, this area hit and rejected off this area 1, 2, 3, almost 4 times. Correct. So on these 3 little tops, I drew trend lines. I got a trend line from my past that's coming up 1, 2 points right there. Makes it a valid trend line. And as you can see, if we go higher, now we're inside of a trend. I call it like a trend triangle. But it's about to break out. It broke out, retested, then went down. Nice little sell-off. That was the crazy sell in the beginning of this video that I was talking about. To where we are now. Now, if you look at this is the 4-hour. If you look at the market on the 4-hour, or where we currently are in the market, and I use the 4-hour a lot. The 4-hour, the hour, and I monitor the 15 and 30 when I have live trades open. But I usually trade off the hour, but I utilize the hour and the 4-hour for the most part as far as setting up my analysis and my overall moves that I'm going to take. As you can see on the 4-hour, market comes down, find support in this area right here. Get a nice little bullish candlestick. Again, you can't estimate that the market has reversed at this point just by looking at this candlestick on the 4-hour. It kind of goes up, kind of retraces a little bit, then goes up to the top of the zone area. You can tell this is zone area because here in the past you have these other points that kind of rested on support or consolidated on it. So this is also where I had my minor structure Fibonacci. As you see on the 4 hours, consolidating to the right now in the middle of this trend triangle. And then now we're just waiting for a breakout when the new week starts on Sunday. But based on the RSI, it looks like the market wants to come down first, or more than likely it will come down. It doesn't have to, but it will more than likely come down. For my RSI, you see, I usually kind of monitor based off where the moving average is, this yellow line, and where this purple bar is, where the market is. And I'm waiting for those two to cross. But when there's a nice big space in between them, I can tell, depending on which side it's on, above it or under it, like which way the market could or could not go. So like I said on the 1-hour chart, and now we're going to go to that before we wrap up this video. Like I said, from the 4-hour on the RSI, it was a big gap that looked like it was going to come back down. Again, it was going to come back down and retrace before it goes back up and becomes bullish. Or, like I said, it could possibly go up a little bit more before it comes down and goes back up. But ultimately, based on the 4-hour RSI, I do believe it's going to come back down before it ultimately goes back up. And from there, it can go anywhere it wants to go. But here's also something to look out for the future too. 2 things I do look out for when I notice them. Again, it's trade what you see, not what you think. So this has not happened yet, but it's a possibility. So just be on the lookout for it once the market starts to kind of fill in the next couple of days to another week or so. Right here, this area right here, this area right here, and then potentially in the future, somewhere over here in this area, could be what is called an inverted head and shoulders. So that's another indicator, I guess you could say. Like this definitely would be somewhat a candlestick reversal pattern in a way, but it's mostly just this boom, 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 something to this effect. And that just means that area like this will be like this is a shoulder, an area. Let me do it again. An area like this. I'm sorry. This area is this area right here is the head, and this area over here, should it happen, would be another shoulder. Oops, it's too large, but you get the point. It will be an inverted head and shoulder, which means from this, what I would say is a candlestick reversal pattern, it's just another indicator that the market is becoming bullish, and we should look for buys once we find. But most times you're gonna see smaller candlestick reversal patterns inside the head and shoulder pattern. So mind you, this is inverted. So inverted just means it's upside down. So if you take that same pattern, you put it on his head, then this would be a head. These would still be the shoulders. It's just this right here would be on top of the shoulders. And then ultimately, if it's a regular head and shoulders pattern, then we're looking for, more likely we're looking for sales, obviously. And if it's inverted, we're looking for buys. But you wouldn't get in until you get some type of confirmation, i.e. a candlestick reversal pattern, break and retest of a zone. Those are what I look for the most. So yes, so say something like this. Like I said, we don't know what the market's going to do on GU in this upcoming week because it hasn't played out yet. But for this to happen, this shoulder to happen, we would need something like this to take place. Oops. Yes. Okay, there we go. Boom. Perfect. We would need something like this to take place. Something like this, but on this side. So now we have this left shoulder, we have the head, and then we'll have this over here, which will be the right shoulder. And you see right here where we have this green candlestick slightly larger than this candlestick. That is a bullish engulfing. So that's a candlestick reversal pattern. As you can see, once this candlestick closed, the market went up. It didn't go up long, but it did go up. So that's what I mean when we say if we saw something like this on this side, on this shoulder, that will be our indicator to potentially buy. But remember, we're going to match that with multiple forms of confirmation, using the RSI, using potential trend lines if you have them, using, of course, the candlestick reversal patterns, using the Fibonacci and the retracement levels, 38.2, the 50%, 61, and 70 are key levels that I look for with a market to retrace to get in. And once I get that candlestick reversal pattern, it's go time, enter in 2 or 3 trades, and just sit back and try to get this money. So yeah, ultimately, that is my assessment for Great Britain USD for the upcoming week of, let me see, let me get the correct date for y'all. For the week of October 14th through the 18th, 2024. Again, I'm low key, and I'm gonna catch y'all next time. Y'all be cool.